Hello viewers, welcome to my channel. I'm Hashim Ali Khan. Now I'm going to start the problems on capital gain. Last video I have explained you in detail regarding the provision of Income Tax Act 1961 regarding the taxability of income from capital gain. I have explained the meaning of capital gain, types of capital gain, short term, long term, what are the rates of tax and how to compute the income from capital gain, what are the exemptions available. All these things I have explained you in the previous video. So if you have watched that video, then definitely these problems will be very easy, simple, and you can enjoy the learning of the subject Income Tax 1. So if you have not watched that video, I suggest you to go to the playlist of my channel. Select the subject Income Tax 1 for the assessment year 2021. Watch that video and then you start the problems. For new joiners, I suggest you to go to the playlist. I've uploaded so many subjects videos: financial accounting, advanced accounting, cost accounting, managerial accounting, corporate accounting, and business statistics, financial management, investment management. So many subjects videos I've uploaded. Select your subject, select the topic, watch the video from beginning till end and enhance your knowledge, your confidence on your field of study. Now, before starting the problems on capital gain, I expect my viewers to have a printout of the problems which I have provided in the link under my description. So take a printout, hard copy, and keep it ready before starting the problem. Now I am reading out the first problem. Mr. X purchased a house property on September 1st, 1989 for rupees 42 lakhs. Fair market value of the property on 1st April 2001, 40 lakh 50,000. He incurs the following expenses: construction of a room on the ground floor during 1990-91, 3 lakh. Renewal or reconstruction in 2003-2004, 6 lakh. The property is transferred on 31st March 2020 for rupees 5 crore 10 lakh. Find out the amount of long-term capital gain for the assessment year 2021. CII, Cost Inflation Index, for 2019-20 is 289, for 2001-2002 is 100, and 2003-2004 is 109. This is the information given. Mr. X is selling the property. He has purchased the property on 1st April 1989. Previous theory video I have explained you, Income Tax Act has given the provision. If an asset is purchased before 1/4/2001, SSC can choose higher of the following two as the cost of acquisition: actual cost or fair market value. Whichever is higher can be taken as the cost of acquisition. And it's a long-term capital gain, so we have to calculate indexed cost of acquisition. So how to calculate indexed cost? Actual cost into index number of current previous year. See here, our assessment year is 2021. So previous year is 2019-20. The previous year is 2019-20. So remember the index number for 2019-20 is 289. 289 is the index number for the previous year 2019-20. Right? Now, the solution of this problem will be like this. Computation of LTCG, long-term capital gain of Mr. X for the assessment year 2021. Consideration received. At what price he sold the property? 5 crore 10 lakh. Minus transfer expenses or selling expenses. It is not given in the problem. But for the formality purpose, I am writing it, put a dash. Net consideration, 5 crore 10 lakh. From this, we deduct indexed cost of acquisition and indexed cost of improvement. First, indexed cost of acquisition. Actually, the house property was purchased before 1/4/2001. That is 1st September 1989 it was purchased. The purchase price was 42 lakh, but fair market value on 1/4/2001 is 40 lakh 50,000. Whichever is higher. So higher is 42 lakh. So we take the cost of acquisition 42 lakh. But we want indexed cost of acquisition. So indexed cost of acquisition formula is this one. Indexed cost of acquisition is equal to actual cost of acquisition into index number of current previous year. Our current previous year is 2019-20, and for 19-20 index number is 289, divided by index number of the year of purchase. If an asset is purchased before 1/4/2001, index number will be taken as 100, because our index numbers are given from 2001-2002. From 2001-2002, we don't have any index number before 1/4/2001. So if an asset is purchased before 1/4/2001, index number will be taken as 100. So actual cost into index number of current previous year divided by index number of the year of purchase. Here 42 lakh into 289 divided by 100, you will get 1,21,38,000. Second, index cost of improvement during 1991. It is given in the problem. Some construction was done, some rooms were created in the year 1991, but 1991 is again before 1/4/2001. The improvement is made before 1/4/2001, so we ignore that. We will not consider, because we are considering FMV on 1/4/2001. So the improvement made before 1/4/2001 should be ignored. Now index cost of acquisition, index cost of improvement during 2003-2004. This 2003-2004 means after 1/4/2001. Now we have to calculate the indexed cost of improvement. So actually 6 lakh rupees are incurred. So 6 lakh into index number of current previous year 289 divided by index number of 2003-2004. When the improvement was made 2003-2004, the index number for 2003-2004 is 109. So 6 lakh into 289 divided by 109, 15,90,826. We got indexed cost of acquisition, we got indexed cost of improvement. Add up both. The total will be 1,37,28,826. Now subtract. 5 crore 10 lakh minus 1 crore 37,28,826. You will get 3 crore 72 lakh 71,174. This is the long-term capital gain. That's it. This is the end of the problem. Now in working note I have given some explanation. In examination you must write the working note. You should not write only the computation part. Apart from that, working notes are necessary. So the SSC purchased, the asset was purchased before 1/4/2001, so the SSC can choose higher of the following two as the cost of acquisition. First one, actual cost 42 lakh. FMV on 1/4/2001 is 40 lakh 50,000. Whichever is higher. So 42 lakh is the cost of acquisition. Second, cost of improvement in 1991 is not considered because we consider the FMV on 1/4/2001. This improvement is before 1/4/2001. The improvement made before 1/4/2001 should not be considered. Indexed cost of acquisition formula is this one. That's it. This is the end of problem number 1. Now second problem, Mr. Y sold a commercial building on May 10th, 2019 during the previous year 1920 for rupees 1 crore 10 lakh. From the data given below, find out the income under that capital gain for the assessment year 2021. Cost of the plot of land acquired in 2004-2005. That means this asset was purchased after 1/4/2001. So we will take the actual cost. We will not consider the FMV. FMV will be taken if the asset is purchased before 1/4/2001. Here asset is purchased after 1/4/2001. Actual cost will take. The cost of the plot of land is 3 lakh. Cost of construction incurred in 2005-2006, 4 lakh. Cost of additional construction, this is improvement, incurred in 2009-2010, 6 lakh. Expenditure on transfer expenses, 6,000. CII, cost inflation index, for 2019-20 is 289. For 2004-2005, 113. 2005-2006, 117. And 2009-2010, 148. So different index numbers are given. It's very easy. Now see here. Computation of long-term capital gain of Mr. Y for the assessment year 2021. Consideration received 1 crore 10 lakh given in the problem, sale price. From this we deduct Transfer expenses 6,000. Subtract 6,000. 1,09,94,000 is the net consideration. From this video, now we have to deduct indexed cost of acquisition, indexed cost of construction, indexed cost of improvement. First of all, the SSC has purchased a land. In which year he has purchased? 2004, 2005. He has purchased the land for a price of rupees 3 lakh. The actual cost is 3 lakh. Now we want indexed cost of acquisition. So 3 lakh into 289 is the current previous year index divided by index number of the year of purchase. Purchase year was 2004-2005. For 2004-2005 index number is 113 given in the problem. Then we got 7,67,257. Then indexed cost of construction. On the land, construction was made in 2005-2006. The amount of construction 4 lakh. So 4 lakh into 289 divided by 117. 117 is the index number for 2005-2006. Then indexed cost of improvement. Improvement was made in the year 2009-2010. 2009-2010 improvement was made. So 6 lakh into 289 divided by 148. 148 is the index number for 2009-2010 given in the problem. Now multiply 11,71,622. Now add up the three amounts, all the three. Indexed cost of acquisition, indexed cost of construction, indexed cost of improvement. It is 29,26,913. Now subtract 1,09,94,000 minus 29,26,913. 80,67,087. This is the long-term capital gain. So two problems we have completed on computation of LTCG, long-term capital gain. Come on, now we'll start the next problem. Problem number 3. X purchases the following capital assets: gold and shares in A Limited unlisted. So year of purchase gold 1984-85. The cost price was 35,000, but the fair market value on 1/4/2001 it is 1,10,000. So when an asset is purchased before 1/4/2001, the SSC can choose the higher of the following two as the cost of acquisition: actual cost or FMB on 1/4/2001. Right? So here gold was purchased in 1984-85, much before 1/4/2001. The actual cost 35,000, FMB 1,10,000. So SSC can choose 1,10,000 as the cost of acquisition. Shares in A Limited, date of purchase 1989-90. The cost is 85,000, but FMB is 84,000. Whichever is higher, 85,000 is higher. That we will take it as a cost of acquisition. Now these assets are purchased by Mr. X. Mr. X dies on August 5th, 2007, and as per his will, these assets are transferred to his son, Mr. B. B sells these assets on June 5th, 2019, current previous year. Current previous year is 2019-20. So during this current previous year, on 5th June 2019, for a total consideration of 33 lakhs, gold 13 lakh and shares 20 lakh. That means Mr. B is the present owner. Mr. B is the son of Mr. X. X has purchased those assets and he dies on 5th August 2007. And as per his will, the debentures, the assets are transferred to his son, Mr. B. So Mr. B is the present owner. He is the SSC. He sold the asset, but he has not purchased it. He got the assets by a special mode of transfer, that is gift or will. Through will he got the assets, right? So find out the amount of capital gain chargeable to tax for the assessment year 2021. CII, cost inflation index, for 2019-20 is 289 and 2001-2002 is 100. Already we know it. Current previous year index 289 for 2019-20. For index number on 2001-2002 is 100. That's it. Now two new points are there in this problem. The first one, computation of LTCG of Mr. B for the assessment year. Consideration received. He sold the gold for rupees 13 lakh. Shares were sold for 20 lakh, total 33 lakh. Transfer expenses are not given. Net consideration we got it. Indexed cost of acquisition. Now for indexed cost of acquisition, the actual cost or FMV or on 1/4/2001, whichever is higher. So we can see in case of gold, 1,10,000 is higher. So 1,10,000 into 289 by 100. We'll get 3,79,900. Similarly for shares, the higher is 85,000. So 85,000 into 289 by 100, 2,45,650. Subtract, you will get long-term capital gain 9,82,100 for gold, and for shares 17,54,350. This is the long-term capital gain. Now in working note, we will write down about the special point here. Special point is the SSC got these assets freely. He has not purchased by a special mode of transfer, that is will. Actually, assets were purchased by Mr. X and he expired, he died. And according to his will, the assets are transferred to B. So the assets were purchased before 1/4/2001. So the SSC can choose higher of the following two: actual cost or FMV, whichever is higher. Secondly, the SSC Mr. B got the property through special mode of transfer, that is as per the will of the deceased person. The deceased person was Mr. X. He died. So as per his will, the assets were transferred to his son, Mr. B. So the cost to the present SSC is the cost to the previous owner. Actually, the cost to the present SSC is nil. He has not paid anything to get these assets. He freely got the assets. So in reality, the cost of acquisition is zero for the present SSC. But Income Tax Act says the cost to the present SSC is the cost to the previous owner. The previous owner was Mr. X. So whatever is the cost of Mr. X, that will be taken as the cost of Mr. B. The date of acquisition of the previous owner should be considered. We have to consider what is the date of acquisition of the previous owner, not the date of acquisition by the present owner. The present owner, when he got the asset, we should not see. We have to see what is the date on which the previous owner has purchased the assets. So the date on which present owner got the property should not be considered. So these are the points you have to remember for this problem, 23rd problem. Now I am reading out the fourth problem. X purchases the following assets on March 10th, 2015. So Mr. X purchased listed debentures of A Limited 1,10,000 cost, listed debentures of B Limited 1,04,000. So two different companies, A Limited and B Limited. So Mr. X purchased the debentures of A company as well as B company. When he has purchased during the year 2015 and he is selling the assets during the current previous year 1920. So it's a long-term capital asset, more than 3 years. On June 10th, 2016, he gifted debentures of B Limited to his son Y. So on June 10th, 2016, Mr. X has transferred or gifted the debentures of B Limited to his son Y. Now presently Y is the owner of the debentures of B Limited. He got through gift. Who has gifted? His father, Mr. X. X dies on April 3, 2019, and as per his will, the debentures of A Limited are transferred to his son Y. So during the lifetime of X, he has gifted the debentures of B Limited to his son Y. Later on, X dies, and according to his will, the debenture of A Limited also transferred to his son Y. Now Y is the owner for debentures of A Limited as well as debentures of B Limited. A Limited debentures he got through will. B Limited debentures he got through gift. So through gift or through will, it's a special mode of transfer. The present SSC Mr. Y has not paid anything to get these assets. Freely he got. Special mode of transfer. Then on March 1st, 2020, Y sells debentures of A Limited for 4,10,000, expenditure on transfer 600, and debenture of B Limited 2,78,000, expenditure on transfer is 700. Find out the amount of capital gain chargeable to tax for the assessment year 2021. So during the current previous year, Mr. Y sold both the debentures, debentures of A Limited and debentures of B Limited. A debentures are sold at rupees 4,10,000, on which transfer expense are 600. B Limited debentures are sold for 2,78,000, transfer expense are 700. That's it. This is the problem. Now again, just like the previous problem, in this problem also the SSC got the asset through special mode of transfer. Now, computation of LTCG of Mr. Y for the assessment year 2021. Consideration received: A Limited debentures 4,10,000, B Limited debentures 2,78,000. This is the sale price of debentures of A Limited and B Limited. From this we deduct transfer expenses, selling expenses 600, 700. So net consideration we got 4,09,400, 2,77,300. Now deduct. One new point. For bonds and debentures, indexation benefit is not allowed by Income Tax Act. Income Tax Act says indexation benefit will be allowed on all other assets except bonds and debentures. No indexation. No indexation benefit. Only cost of acquisition will be deducted. So what is the cost to the present owner? The cost to the previous owner. Previous owner was Mr. X. At what price Mr. X purchased those assets? 1,10,000 for A Limited debentures and 1,04,000 for B Limited debentures. This is the actual cost to the previous owner. And that actual cost to the previous owner will be the cost to the present owner. Now deduct. We'll get long-term capital gain 2,99,400, 1,73,300. Here I have written indexation benefit is not available in case of debentures and bonds. That's it. Now in working note, the SSC Mr. Y got the assets through special mode of transfer, that is gift as well as per will. So the cost to the previous owner will be the cost to the present owner. This point you have to write in examination in working note. And secondly, for bonds and debentures, indexation benefit has not given by the Income Tax Act. Actual cost should be deducted, indexed cost should not be calculated. That's it. So totally 4 problems I have completed in this video. So if you think that these videos will increase your knowledge, you are benefiting from these videos, if you feel, so give a like to the video. Share this channel in your group, in your friend circle, so that more students can watch the video and increase their knowledge. Give your comments on these lectures, and finally, don't forget to subscribe my channel if you have not yet subscribed yet. We'll continue the next problem in the next video.